Okay, are we live? Yes. So, hello everyone, and welcome to another session of the Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP-Invest, and thank you so much for joining in the session. The last entire week has been a bit of a break for me where, after doing these live streams continuously for 1 year, I decided to take a 1 week break. I'm very happy and excited to come back to all of you and continue the live sessions. So, today's session is something that is a repetitive question which has been coming up on my YouTube accounts, on my Instagram accounts, where, by the way, we are almost touching 25,000 followers. So I thought that let's dedicate this week's Let's Get Technical series to discussing it. The topic is how to select stocks for swing trading. So a lot of you know what swing trading is. Let's do a quick recap. Swing trading is basically buying stocks low, selling high. That's in theory. But in a more demonstrative manner, prices in the stock market never move up in a straight line. They always move up in swings or waves. So when we're swing trading, what we want to do is we want to play this entire uptrend, but we don't want to buy and hold till the top. What we want to do is we want to buy, we want to sell at the top. When the stock dips, buy again, sell at the top, dips again, buy again, sell at the top. So essentially in a stock, which is, say, delivering maybe 40% in a matter of 8 months, what we want to do is we want to optimize our strategy just like you would in a business. You want to take your capital, you want to churn it maybe 3 to 6 times in a year, and you want to generate alpha. By generating alpha, I mean you want to firstly beat the market returns by doing swing trading. Secondly, you also want to outperform the stock's own performance in any given period. Of course, this is easier said than done. There is a lot of skill, there is a lot of strategy, there is a lot of risk management which is required to do swing trading successfully. And my company, EXP-Invest's entire mission is based around simplifying swing trading for retail traders. So in order to do that, I share a lot of educational knowledge on the topic of swing trading in the Indian equity space. I give services, swing trading recommendation, which is my Trade Together program. I also train people in the entire ecosystem end to end on, how to select stocks, how to set up your trading view, so on and so forth. There's also one-on-one consultations. There's a lot of information. So what I'm going to do is I will drop my Telegram channel's link in the comments right now so that you can join my Telegram channel and get to connect with me if swing trading is something that you're genuinely interested in and want to pursue as a potential source of side income in your business, like in your life. Okay. So with that, let's get started. All right. Okay, everything is looking good. All right. So in order to do this presentation, I don't have a presentation per se. What I want to discuss with you is actually the logic of how to do high level or profitable swing trading. And in order to do that, I am going to share my screen with you right now, and we are going to build the presentation as we discuss. Okay, let's share the screen. I hope you're able to see it. Awesome. Now, let's start with a blank slate. Now, what we have in the stock market is more than 6,000 stocks. Okay. If you want to do swing trading, you need to do 5 things correctly. Number 1, you need to buy the right stock. You need to buy the right stock. You need to buy it at the right time. You need to buy the right amount of it. That means allocation. And then you need to sell the stock, sell it at the right time. And you need to sell it at the right price, right? Because when a stock bottoms or tops, it changes quite fast. So at the right time, and we also need to, of course, buy it at the right price. So in between the buying and the selling, what comes is basically called your, let's change the color for this, is basically called your risk management on the position that you're taking, right? So what do we have here? If you want to do swing trading in the stock market, a lot of people will focus on only one thing. And what is that one thing? They will only focus on this. The stock name. But if you want to do swing trading, knowing only the stock name is never going to help you. You need to know what is the right stock to buy, what is the right time to buy the stock. You have to buy the right amount of it, which is capital allocation. You have to buy it at the right price. And then when it's time to sell, you have to make sure that you're selling it at the right time and you're selling it at the right price. Without doing all of these things, you will not be profitable. And in between these things also, you need to manage your risk properly. What is risk management? It is basically maintaining your stop losses, trailing your stop losses. So what do you need? You need to know firstly how to select the right stock. So today in this session, we are only going to focus on buying the right stock. Now, in order to buy the right stock, there is a whole process to it. Then in the coming sessions, we'll also expand on how to buy it at the right time, how to know that it's the right time to buy a stock. How do you buy the right amount of a stock? That is capital allocation. How do you buy it at the right price? That is identifying specific entry prices. How do you sell it at the right time? How to set proper trailing stop losses. And then how do you know that it's right time to sell the stock? And how do you precisely identify your exit position? To be honest, the right side of the screen, selling at the right time and selling at the right price, is something that I am also working on improving in myself. But what I've seen, the more I talk about things, the more I learn through all of you. So let's get into the discussion of how do you know which is the right stock to buy? So like I said, the stock market is gigantic and there are nearly 6,000 stocks. How do you identify? It is impossible for you to keep tracks on every single stock. So you need to first identify which are the kind of stocks that are profitable for you to swing trade in. So the first thing that you need to take care of is, especially if you want to do swing trading, is that there is sufficient volumes in the stock, which means that stock has enough liquidity to allow you to enter and exit your position as and when you need it. If the stock is not liquid and you want to do swing trading, which is a form of active trading, there is a pretty good chance that you're going to stuck at prices which are not favorable for you. You want a stock where no matter what your reason is for buying or selling the stock, may it be news encouraged, may it be based on your strategy, may it be based on your own liquidity, personal needs, you need to have positions only in those counters where entry and exit should not be a problem for you, where there should be enough participation so that if you put an order at a certain price, you get a fill if the price comes. You don't have to wait, right? So that uncertainty needs to be taken care of because it's a major risk. And when you're doing swing trading, every single point matters. So never opt for stocks which have liquidity issues or trading volume issues, or trading volume is too low in them. Make sure that first of all, the volume is pretty good. So what we are trying to do here is basically we are segmenting this universe of 6,000 stocks on the basis of certain parameters, and I'm sharing with you those parameters. So the first parameter, like I said, is the volume and liquidity. How can you make sure that the volume and liquidity is significant or is enough? First of all, look at the market cap. You don't want to engage in active swing trading in stocks, micro cap or very small cap stocks, because there oftentimes the liquidity is an issue. So you want to primarily stick to large cap stocks, mid cap stocks, and keep very few number of small cap stocks in your portfolio if you in your watch list if you absolutely have to, right? Okay, so let's see. This is what I was looking for. All right, so volume and liquidity, right? Now, one thing that you also need to remember, in addition to volume and liquidity in the stock market, let's move on to another criteria here. So volume and liquidity, and okay, personality. So what do I mean by personality? So every stock, just like every person in the world cannot be your friend, every stock in the market cannot be suitable for you to trade in. So there are some stocks that are super trenders, which means they start trading, and once they begin a new trend, they just keep going on and on and on for, like 5x, 6x, 7x, 14x returns over a period of 5, 6, 10 years. They tend to have prolonged rallies and upside and downtrends in a very prolonged manner. These are super trendy stocks. These stocks are very good for long-term trading. They may not be very good for swing trading, because in these stocks, if you get stuck on the wrong side of the trend, and if you're not using a stop loss, there's a pretty good chance that you might have to change from being a swing trader to a long-term investor there, which, by the way, is a very bad discipline when it comes to trading. So you need to take care of the personality. One of the personalities is the super trender kind of stock. And this is, by the way, my own terminologies. I have been able to segment my own watch list of stocks into multiple criterias, and that really helps me in determining my trading strategies and identifying opportunities better. So one is the super trender stocks. So I'm just going to write ST for them. Next is the momentum movers. Momentum movers are stocks which, once a trend begins, they give good momentum moves, and this category of stock is the best for doing swing trading. In my watch list of around 100 stocks, I have categorized them. I have categorized the stocks which are great for momentum trading, and I see from all segments, maybe large cap, mid cap, or the small cap, I see there are stocks which fit into this category of momentum trading, and they are the best stocks to do repetitive swing trading in. And the third category that I have identified are the slow movers. These slow movers are usually the mega large caps, and these slow movers don't make a very good candidate for swing trading or long-term investing. They are probably good for futures and options trading, which I personally don't engage in very much. But I do like to keep them in my watch list, because when the market becomes very unpredictable, at that point of time, when I want to reduce the beta of my portfolio, when I want to reduce the risk in my overall portfolio, that time these slow movers can come in very, very handy. When the market is feeling very uncertain or it is choppy, that time these slow mover stocks can become a safe haven for my capital. So that is the reason why the slow movers are also part of my watch list. And last is the combination. So when we talk about combination, stocks can be super trenders and momentum movers. For example, VBL, it's a super trender stock, but it also gives very good momentum trades. And I've been swing trading in VBL for a long time now, and it has not disappointed me. Then there are momentum movers that are slow movers also. There are super trenders also that are slow movers. That is, they do go into trends, but like in maybe 3 years, they'll move like maybe 40-50%. So it is a super trender, that is, once it starts to move up, it goes up consistently, but the move is really, really small, right? And yeah, so that's that. So that is the combination. So the personality stage will actually come a little bit later. What I like to do, one very, very important point that I absolutely forgot. When you're segmenting, or when you're reducing this list of 6,000 stocks to 100 stocks, or maybe as a retail trader, you should actually limit yourself to just 15 to 20 stocks, because tracking even 100 stocks is a lot of work. Trust me, it takes more than a full-time it's more than a full-time job. Like, you have no idea the crazy hours that I have to work to stay on top of my own list of stocks. So another very important point that you need to make sure of is the fundamental quality of the stock. So when I say the fundamental quality, what I mean is that the stock should not have any corporate governance issue. Its revenues should be growing, its margins, even if it's not expanding, it should not be dwindling. Its overall industry should be experiencing tailwinds rather than headwinds. The overall economy also should be heading in a strong direction. Now, the reason why my company EXP-Invest is so hyper-focused on swing trading is because I personally am very bullish about about India's overall growth prospects, and there is a logic to that. The reason why I'm super bullish is, of course, there's the government policies and the expansion and the improving fiscal deficit and the growing jobs data within the country. There's a lot of strong macroeconomic data flowing in, which suggests that India is on a track to supermassive growth in the next decade. But in addition to that, what I have observed is that people who belong to my generation, who are, the millennials, they are not as shy of the elder generation when it comes to investing in the stock market. But right now, they have higher human capital than financial capital. In the next 10 years, they will be able to convert this human capital or their potential into financial assets by way of engaging in business and jobs, and all of this money, instead of putting in FDs and RDs, they are going to prefer to come to the stock market with it. With a stronger regulatory framework, something like Harshad Mehta scam is not going to happen again, hopefully. So the regulatory environment is a lot better. The growth economics is better. The generation is better educated. Their risk-taking capacity is higher. And most importantly, India is a savings-first economy. So the expectation is that a lot of the money, which is right now sitting in FDs and RDs, is going to get inherited by the millennials over the next 10 years. And as their own financial assets grow, they're going to bring all of that money to the stock market. So in this market, developing a key skill set like swing trading is very, very attractive. And anybody who makes up the right decision to pursue this skill set in a disciplined manner right now is going to stand to benefit. Whereas those who are wasting their time behind practices like intraday trading or options trading or even futures trading without properly understanding the risk are not only wasting their precious money, they're also wasting their time and incurring huge opportunity costs, which they don't even assign any cost to. So when it comes to deciding which are the stocks that you can do swing trading in, you need to make sure that the stock is liquid, it has good volume participation, the stock's personality suits your requirement. So if you want to do swing trading with, like I said, if you want to do the buy and hold strategy, at the end of the day, the buy and hold strategy, a lot of people think it's equivalent to buy and forget the stock. That's not true. You need to buy the stock, but you also need to sell it at some point of time, because what is the point of making the investment otherwise? It's just that in this buy and hold strategy, I would say that instead of selling the stock within 1 year, you're selling it over many, many years. So you need to identify how frequently can you afford to trade in the market. And based on that, you need to identify stocks which suit your own requirement. If you're okay with trading stocks with a time horizon of 2 weeks to 1 month, look for stocks which give identifiable swings in that time frame. If you're like me and you're okay holding stocks for anywhere between 2 weeks to 3 months, then again look for stocks which give clear-cut swings, with that time frame. What I have seen is that for my own time horizon of holding period of 2 weeks to maybe up to 3 months, the 75-minute time frame is where I want clarity for, where I want clarity on. So for swing trading, the momentum movers that I'm talking about here are the stocks on which have very clear, readable trends on the 75-minute time frame. Now, when I talk about personality, you can also look at it from a time frames perspective, which means that when you study the charts of the stocks, it's not necessary that every single stock's every time frame is going to be very clearly readable to you. There are a lot of stocks in which the trends are easy to read on the weekly time frame. There are stocks on which the trends are easy to read on the daily time frame. There are stocks on which the trends are easy to read on the 75-minute time frame. But when you go lower and lower, the trend becomes a little less clear and the noise tends to be much, much higher. So you need to always, so what I have done is, for my watch list of 100 stocks, I know for a fact which are the stocks where what is the personality, which is the decision making time frame for each of the stocks. So personality, I identify them as a super trender or a momentum mover or a slow mover or a combination of the three. And there's a separate column in which I identify what is the decision-making time frame? Is it the 15-minute? Is it the 75-minute? Is it the daily? Is it the weekly? Or is it a combination? Now, for example, a stock like BEL, what I have seen, it is a super trender, but it can also give you potential entry-exit signals on the 15-minute time frame for swing trading. So it is a combination stock. So you need to do that objective analysis on different time frames. I know this is a lot to take in. This is actually a small glimpse of what I teach in my advanced technical analysis training program. The training program is designed entirely to make people independent swing traders. It'll take you a matter of 2 years to absorb, practice, implement, and become independent in terms of swing trading based on my course. It's a 6-month long course, but there's a lot of material that is covered, and all of that material is based on the insights which I've drawn from my own 12 years of experience, and I keep adding to those insights, as my practice evolves too. So I'm going to drop a link to to my Telegram channel, and after this session, I will also drop a link to the Advanced Technical Analysis training program if it is something that you are interested in. All right. Let me quickly just take a look at the comments and then. All right, so I can see that some of the members are posting stock queries. So if you know, we don't, in order to request your stock queries, you need to fill up a form for me, which is the stock request form. So this is the form that you actually need to fill in. So what you need to do in order to open this, to find this form, is you need to search this address. I'm going to drop this address in the comments again, in the comments for you. So when you fill up the form and see the stock name and your cost, what I'll do is, whenever I get time, I will assess your stock query and I will revert to you. My team will reach out to you with my response. I like to keep things more organized, and I realized that doing these stock queries during the session was not helping anybody, because if you don't get a follow-up on your stock analysis, it's really no good use to you. So allow me a moment to drop this link on the comments. So I have shared the link in the comments. It's EXP-Invest.in/stock request. This is the link where you need to go and fill up the form in order to raise your stock query. And this is first come, first serve basis. So whoever asks their questions first will get the response first. So don't delay. Now, coming back to this session, okay, let's just see Deva. I'm a swing trader with 5 lakh capital. How many stocks I should be working on at a time? Keeping the election session in mind, should I deploy entire capital, or do you advise any certain percentage amount? So Deva, as a swing trader with 5 lakh capital, it would be better if you limited your portfolio size to maximum of 10 stocks, because with a limited capital, if you spread your capital over too many stocks, are going to dilute its power, and the allocation is actually going to vary on stock specific basis rather than the overall macroeconomic condition. As you're suggesting, the elections are coming, right? So you want to keep your capital invested 100% in the market, especially now that a new leg of rally has just started from the 14th of February. I do believe this is a new leg of rally based on the technical charts. I'll be discussing that in details on the Friday's session, so stay tuned for that. But when it comes to swing trading, you need to make sure that you allocate capital properly. So we will discuss more about capital allocation right here in the session when I talk about buying the right amount of it 2 weeks down the line. But if you want access to my capital allocation matrix, what you can do is hop over to my Telegram channel, click on the channel info and go into the pictures, go into the photos, and in the photos you will see something like this. This looks like a little bit of a ladder here. This is my capital allocation matrix, and it has been shared time and again in my Telegram channel itself. So what I'll do is I'll copy the post link so that you can directly find it, and I will paste it in the chat for you. So capital allocation matrix for Deva. There you go. I hope everybody is able to see the capital allocation matrix link that I've just shared. Okay. Does your watch list based on sector rotation or a permanent fundamentally good stocks? So the watch list that I have is, it's not permanent, it is refreshed every 3 months, but only very few stocks, you know. So my watch list is actually, it comprises of majority of indices, and I'm going to discuss about that right now. I'm going to open a file and I'm going to show you what are the indices that I use. And I actually also discussed this same thing few weeks back, and hold on, let me pull out my file. All right, so the watch list. So what I like to do is I like to track these indices. All of you are more than welcome to take a screenshot of this. These are the watch lists. These are the indices that I like to follow. And what I'll do is I take out the stocks of each of this, all of these indices. So in total, there are about, you will see around, I think 150 stocks. And when you hit the unique function on this, you will see there are around 118 stocks. So this is basically my watch list. And then for each of these stocks, I like to identify their personality. Like I said here, I like to make sure that these stocks have good volume and liquidity. I know their personalities and they have good fundamental qualities. So sometimes it so happens that the stocks out of this list also will have a corporate governance issues. For example, this is Vedanta. Now, I don't like the way their books look, so I like to exclude that stock. I don't like the Adani stocks because of, you know, obvious reasons, except for a few exceptions. But I like to keep them out of the watch list, even though they are part of these major indices. So there are some other stocks like that which do creep into the indices, but they are not part of my watch list because I like to do my due diligence. And see, I am a professional trader, so it's possible for me to maintain a watch list of 100 stocks, but honestly, I'm telling you, it is too much to do swing trading in 100 stocks. If you're a retail trader and if you want to go independent, I would suggest that you take some time, take 3, 4, 5, 6 months to identify 10 to 15 stocks, okay, in which you can do swing trading repeatedly. Now, of course, at any point of time, all of these 100 stocks are not active for me to trade. So what I need to do is, which brings me to another stock. So right now, based on these three pointers, what basically happened is I have identified what has happened. I have identified my watch list of 100 stocks, but I am only maintaining positions in a maximum of 15 stocks at a point of time. How do I identify those 15 stocks in which I need to, you know, identify, make my positions? And we are not even talking about the charts part. The analysis has not even begun. We're still on the first part where we are trying to pick up our stocks. So out of these 100 stocks, you want to do swing trading where the underlying trend is bullish. How do I identify whether the underlying trend is bullish? Okay, so I want bullish trend here because I am not doing any kind of futures. I'm not doing shorts. I'm not shorting the stock. I'm not doing options trading. I'm not taking any kind of leverage. I'm doing pure cash trading. So I need to firstly ascertain that there is a bull trend. The underlying trend is bullish. How do I do that? I will look at one time frame higher than my decision making time frame. So like I said, when you're identifying the personality of your stock, you are identifying which is the decision making time frame for it. Okay, so whatever your decision making time frame is, you go one time frame higher and you check the trend there. If it looks like a bullish trend, then it is a good candidate for you to swing trade in. Now, for example, if 75 minutes is my decision making time frame, then I want to look at the daily time frame and I want to make sure that there is a strong underlying bull trend, either a new one or one that is unfolding already. I definitely don't want to see signs of momentum exhaustion or say a negative divergence on the RSI or a high volume leg of correction, which means that probably there's a topping out, or I don't want to see a leg of upside with low volumes on the daily time frame. If the daily time frame is my decision making time frame for the stock, then I will look for bullish signals on the weekly time frame, and I will make sure that there is nothing to negate the bullishness, the bullish view. I want the RSI to be in the bull trend and in the bullish range, right? So see, all of these concepts that I'm talking about, everything has been discussed at one point or the other in my YouTube channel. So if you feel that there are keywords that I'm saying that you don't understand, don't fret. Just go on my YouTube channel, search for those keywords. You're going to find the videos, watch the videos, and you're going to be able to learn so much more, right? So you need to make sure that in order to successfully trade in the right stocks, first ascertain that there is a bull trend. Now, once you know that there is indeed a bull trend under, in the stock, the next thing that you need to do is you need to identify the specific entry point. How do you do that? I personally prefer to run a screener on charting, right, which is based on RSI of the 15-minute, the 75-minute, and the daily time frame. So I am always looking for something called eclipsing in my charts. What is eclipsing? Eclipsing is a phenomena where the 15-minute, 75-minute daily time frame, or at least 3 of the time frames, are giving the same signal of bullishness on the chart. And when eclipsing happens, that is the time when the strongest of the bull trends are noticed. They are a little bit hard to catch because the reversal usually happens very quickly. So having the screener really helps me boil down on the stocks which might potentially, be going through the phenomena of eclipsing. So first, make sure that the stocks are in a bull trend. Sometimes you might, the screener will pick up on stocks which are not in a bull trend. You have to be conscious about avoiding those stocks, because if you only look at the 15-minute time frame to make a decision, then there's a pretty good chance that the stock is actually in a bearish trend on the daily and the 75-minute time frame. But because you didn't do a thorough analysis, you're going to see like a 4-5% upside maybe, and then the stock is going to reverse. And this has happened to me a lot of times in the past, and it's only because that I do my past trade analysis very diligently that I know that this is a mistake that is very, very possible, and it's a very expensive mistake to make, right? So there is a question by Weber. Ma'am, what should I do with 2 lakhs capital? See, Weber, when it comes to trading in the market, your capital is not the only thing. There are a lot of other things which need to be answered. Like, for example, how stable are you financially? Do you have any other source of income? Because at the end of the day, 2 lakh capital is too less to do anything significant with, to be honest. However, that doesn't mean that you should not come to the stock market or you shouldn't do swing trading. With the 2 lakh rupees capital, firstly, if it is your only if it is your disposable income, right? Only if it is income that you can, if loss does not affect your standard of living, then you should bring it to the stock market. But if this 2 lakh capital is very fundamental to your existence or your standard of living, then you should not consider investing in the stock market. So if you're a stock market beginner, then the 2 lakh capital can, to first get a hands-on experience of the market, I would, if I were new to the market and had 2 lakh rupees, I would first put it in a Nifty ETF, like Nifty Bees, and I would try to get a sense of market fluctuations. On the side, I would also work on developing my foundational knowledge by using resources like Zerodha Varsity, which is a completely free resource and very high quality information there. Also, there is ChatGPT. So if any concept on the Zerodha Varsity would feel complicated to me, I would copy paste that same information in ChatGPT and let it simplify it for me so that I'm able to absorb it better. And once a foundational knowledge is garnered, then I would work with somebody who could act as a mentor to me, give me, risk manage trade setups. So if you remember at the beginning of the program, I mentioned my Trade Together program. So the Trade Together program is a hand-holding program where I give actionable advice to people who don't have the skill sets and the systems to come up with swing trading ideas. And then I will help you with the execution by giving you trailing stop losses, by telling you when to exit, and if you need to re-enter a stock that has been exited for XYZ reason. And I will also talk to you about the reason. If you at any point of time have a question, there is also a way to communicate with me. It's totally up to you. But it's always better to, if you don't have the time or the bandwidth to do a trial and error like I have done over the past 12 years, then the best approach would be to associate yourself with somebody who can guide you and make sure that they are SEBI registered. All right. So Dharamraj is asking, please define high volume or good liquidity in number or in range. So Dharamraj, it's it's very hard to define it in number or in range terminologies, because I have seen that there are stocks which are in the large cap category from a market cap perspective, but they're still illiquid, right? So what I like to do for the sake of liquidity is I like to go in and look at the charts of 3-minute, 15-minute and 75 in the daily time frame, and I want to see a continuous price movement. I don't want to see broken movements. If there are broken movements, if there are circuits, if there are if there are gaps, lots of gaps, and there is a lack of continuity in the price trend, then that is a very clear indication to me that there is a liquidity issue in the stock. Thank you so much, Shiju. I hope you will join my Telegram channel. Should we do swing trading in very high PE stocks like Trent, Polycab, etc. for 15 days holding period? So, Saurabh, your question has a lot of fundamental problems. So, no pun intended here, because see, while you're talking about the PE here, honestly, the PE and swing trading don't really have a lot of correlation, because even stocks that have very, very high PE can potentially give you swing trading opportunities. So it is not the PE that decides whether the stock is a good or bad candidate for swing trading, but it's actually your skill set when it comes to, what I described here, identifying. So when I talk about the skill of swing trading, I'm talking about your own ability to buy the right stock at the right time, at the right amount of it, at the right price, manage the risk while you hold the position, and then sell the stock at the right time and at the right price. So the PE doesn't really have a lot of role there, because even stocks with high PE also give swings, which gives you opportunity to swing trade in them. All right, let's so just a quick reminder to everybody, if you're enjoying this live session, please don't forget to give a thumbs up to this video and leave a kind comment once the recording has been posted. All right. So Reddy Krishna is asking, what is the best way to rebalance a portfolio when it is in losses? And I have a very simple response to it. you need to rip the band-aid off. A lot of times we hold on to losers in the portfolio thinking that it is going to gain in price, gain in level, and we will hopefully exit the stock at break even. The truth is that even if that break even comes for you, you lose your confidence to sell thinking that the stock might go higher, but that rarely happens and the stock goes back down. So if you have a portfolio which is right now very unhealthy, where basically the control on your capital has gone out of your hands, it's best to get a portfolio cleanup done. Again, it is a service that I do offer. You can Google portfolio cleanup Kavita Agrawal, or again, you can join my Telegram channel. I'll be posting a link of all the ways that I can help you out with. When your portfolio is poor, see, there are three things that you can do for each stock in your portfolio. You can either continue to hold the stock if the stock looks like it's going to go up. If it looks like no, the stock does not have a good prospect and you're incurring a lot of opportunity cost while also incurring the financial losses, it's best to exit the stock. Or if it looks like the stock does have potential and you've held the stock through the bad time, but the good times are about to come, then it would make sense to add more to the capital, add more to the stock, given that your capital allocation does not exceed the threshold. Sometimes it might also be that you are holding on to the stock, but you've under allocated or over allocated, then it's very important to rebalance that. So there is a lot of analysis which is required to give that conclusion for each stock, and it has to be done on a stock specific level within your portfolio. So the best way to get your portfolio's health checked is by taking the help of a SEBI registered research analyst and ask them if they will give you actionable advice on your portfolio's stocks. It's going to cost you, it's going to be a high cost, no doubt, but it's going to be worth it, because at least you'll be able to get back control on your capital, right? And then once you acknowledge the mistake that you've done, you can move towards improving those mistakes and doing better for your capital. Because remember, you're not participating in the stock market for a week or a month or a couple of years. This is a new lifestyle that you have committed to, and the effects of this is not just going to stay with you, it's going to stay with the generations to come. So if you do it right, it can really elevate not just your life, but also the lives of those that you love. So Saurabh is asking which moving average to use for trend, that is SMA 50 crossover, suggest for intraday. So Saurabh, I will strongly discourage you from doing any sort of intraday trading, because all these these 7 things on the screen which I'm telling you that you need to do in order to be successful in swing trading. When you do intraday trading, there is a lot more analysis that needs to be done. It needs to be done a lot more frequently. The trend formation is way lesser because there's a lot more noise in intraday trading. Plus, if you are somebody who's not a full-time trader and you're not able to stay in front of the screen to monitor it, if you're like at a job or something, you're just doing a lot of injustice with your capital, first of all. Second of all, the moving averages are a lagging indicators. So I personally prefer to use RSI, which is a momentum indicator and a leading indicator, in order to identify the trend. I like to use moving averages as potential support or resistance zones when the price is, in correction or whatever is trying to break out. So moving averages are actually a very secondary form of indicator for me, not a primary decision-making indicator whatsoever. So how much capital is required for swing trading? Ajit is asking. So Ajit, I personally recommend people to come into something as risky as swing trading with a minimum capital of 2 to 3 lakhs. And remember, this is a minimum capital. You would need like a 5 lakh capital is good, but you can still do it with 2 to 3 lakhs. But again, it is very skill intensive and it requires a lot of consistency and requires more discipline, because when you have low capital like 2 to 3 lakhs, it's very easy to get tempted to, go for options trading. But the truth is that in options trading, even if you end up having a good profitable streak, you only need like one bad trade to lose all of that profit, some more capital. And I've seen people lose literally 100% of their capital in swing trading, and then some, in options trading, and then some more. So you can start with like 2-3 lakhs capital, but just be sure that you're working with a mentor who can bring you back if your discipline wanes. Swing trading week-wise has given me returns of around 60% in 3 months. Is it good? So Rahul, it is very good. But remember, swing trading is very, very benefiting when the market is bullish. That is great that you've made returns. Make sure that you still adhere to risk management strategies. Because when a bullish market comes, it also boosts ego for a lot of people and it becomes very easy to become loose. So this is what I prefer to do. This is how I keep myself in check. So I know for a fact that when the market swing happens, right? So when the market is kind of in this stage, this is like the choppy stage or the correction, the bottoming stage. This is where it is extremely risky because here we tend to see a lot of bullish signals, but also a lot of stop loss triggers. So I like to keep my focus more on risk management of my capital. And then once a strong bull trend is established, so I try to keep my capital as much invested in the market as possible while also keeping the risks very limited, very low. And once I'm assured that, okay, the market has established a strong bull trend like it has right now, then I like to take on more riskier bets with bigger stop losses, right? And then I let my capital grow. And here my goal is now to manage my stop losses. Now, what happens when the market actually peaks? If I have stayed disciplined when the rally actually came and kept my stop losses up to date, when the rally starts to top out and the prices start to decline, suddenly a lot of my stop losses are going to get triggered and suddenly I'll be sitting on 60, 70, 80% of cash again, which means that I have booked out on my unrealized profits. So this is something that is very required, and the profits, if you've booked them, very good. If you've not booked them, please make sure that you set your trailing stop losses on them. So today we've talked in details about what is the logic for buying the right stocks. I have told you at the end about the watch list methodology. I've discussed my watch list methodology in a lot more details in another session, which is there on my YouTube. But if you missed, these are basically the indices on which I rely, and I refresh my indices. I refresh the index list every 3 months, and on the basis of the constituents of this list, I go back to the charts to ensure that the volume and liquidity is good, the personality matches my requirements, and the fundamental qualities, that is corporate governance, revenues, margins, and the industry tailwinds are on point for me to take my positions. And then it's such a longer decision, like it's such a long discussion about success in swing trading, but we'll cover all of that. However, if you are interested in a more systematic discussion, in a more systematic learning, in a more interactive learning about swing trading, then do consider joining my advanced technical analysis training program. Again, let me drop the link to my Telegram channel in the comments for you if you're interested in more information about it, so that you can join my Telegram channel and we can take the conversation forward there. So with this, we've come to the end of today's session. Thank you so much for giving me your time and your attention. I will see you again on Friday at 5 p.m. in the Market Outlook series, where I bring to you discussion about Nifty, Bank Nifty, and most importantly, the intersector analysis to assess where the momentum is, because that's where we want to put our cash. So see you again on Friday. Thank you so much for joining. Namaste.